Today, we're going to talk about the growing banking crisis that has small business owners concerned about their lines of credit being canceled as elevated interest rates further diminish loans in the financial sector. The National Small Business Association, or NSBA, recently released a poll on the current state of lending in the U.S. following the collapse of Silicon Valley Bank, or SVB. And the results were concerning. More than half of the respondents said they are not able to obtain adequate financing, while 1/3 of respondents said terms have become less favorable to their business in just the last month. Meanwhile, 13% of the respondents said that in the last month alone, they have experienced a decrease in the account limits of their credit lines or credit cards. This is a big problem for small businesses because they often rely on credit to maintain and grow their businesses. And with lending standards tightening over the last year, it's becoming even harder for them to get the funding they need. Small business owners are worried about the security of their finances, especially after the collapse of SVB. And with interest rates continuing to rise, they're concerned that their credit lines could be canceled or their loans reduced. Some recent reports have cited some business owners who have been affected by this crisis. For instance, a business owner was awarded startup costs in 2022, but it was not nearly enough to open a small pediatric medical practice. And since then, she's been denied more credit because of insufficient revenue with a business in its infancy stage. But it's not just small businesses in the medical sector that are struggling. Business owners in other sectors have lamented that they will have their access to debt constrained if the banking system continues this trajectory. This means that if a company has its lines of credit canceled, there are significant growth impacts for firms trying to rapidly scale. Not to mention small to medium businesses that are growing need working capital the most. They are paying for weekly labor and materials upfront or within 30 days, spending lots of money very fast while not seeing any customer payments for 6 months. And the latest ADP jobs data showed that jobs in financial activities, professional business information, and manufacturing lost jobs last month. So what's causing this crisis? Well, recent bank collapses like SVB and Signature Bank have caused turmoil in the financial sector, and this is not over. JP Morgan Chase CEO Jamie Dimon warned that it will ripple throughout the economy for many years. The Federal Reserve has also announced another 25 basis point interest rate increase after SVB and Signature Bank collapsed, erasing billions of market value in financial stocks, while First Republic Bank struggled to stay in business even after a $30 billion lifeline from other financial institutions. Small businesses are worried sick about the impact rising interest rates will have on their ability to operate in the face of significantly higher payments. And when you blend higher rates with inflation worries and continued talk about recession, small businesses owners are really put in a pinch. So what can we take away from this? Well, it's important to be aware of what's happening in the financial sector because it can have a ripple effect on the economy as a whole. And for small business owners, it's important to have a solid financial plan in place, to be aware of lending standards and interest rates, and to be prepared for any potential changes that could affect their ability to obtain financing. If you would like more helpful and life-changing financial insights, be sure to join our exclusive group by clicking the link in the description section below. Do not forget to like, subscribe, and share with others who deserve to know this information.